not know what's going on with these keyboards. The recordings should be in the documents folder. There's some in the members room, but I'm the wrong guy to ask because I never use this stuff. Oh my goodness. Thank you for letting me know that. This is what you have when you have thin volume, guys and gals. Wow. Well, that certainly helps us on the bonds. Hang on, let me put a message in the trade room. Lawrence, thank you for letting me know that I was. Okay, so this is what happens when you have light volume. You have to watch the dome. We'll talk about that tonight. I mean, we have less than 700 contracts total on the bid and ask, and it should be something like 3,000 if that tells you anything. And what happens is one of these, big institutions, do not confuse this with high frequency trading. They can come in, and they see where all the orders are, and they just, buy up, 10 levels at one time. Because right now, if you put in an order, just say a market order to buy 400 contracts, you could take out everything between 29 and 32. It's amazing. And then you run the stops, and then you get a little bit added on. And Steve, as far as the NASDAQ did the same, the NASDAQ and the Dow are just going to follow the S&Ps this time of night. So whatever the S&Ps do, that's what you can expect. All right. Let's get down to business. I told them on the bonds, whenever you see a spike, and now, we're trading the bonds because they make a lot more sense in this kind of market than the S&Ps. You can see the S&Ps are just schizophrenic right now, for lack of a better term. We all know markets can be illogical, but they're just schizophrenic right now is the best way to explain it. And the bonds have a little bit more gravity or make a little bit more sense in a market like this. So we sold the bonds in anticipation of the S&Ps going higher. We just didn't know how much higher. Had no idea this was coming, of course. And so whenever I gave them a target of 20 on the bonds, we're short from 30, so it would be 10 points, $31 a tick, that's $300. But you're not going to wait around for 20 because you want to get out on this spike. Whenever the S&Ps jump like that, they're going to come back in, so you're better off just taking your profit on the bonds. Give me just a minute because this is messing up my timing here on this webinar. I thought it was going to be quiet while we did this webinar. All right, this is the first Tuesday on the Globex, as I was saying before. We were so rudely interrupted by the bonds in the market. Yeah, Sam, that's why sometimes that's why I left it open, because these markets are so fast. That's why I said just as close to 155 as you could get. Probably the best you could have done was 154.31. I got a couple off at that price, but not many. Okay. The purpose of tonight for you new folks, and then we always get some of those who've been with us a while in the classroom, is to ask anything you need to ask, because if there's something that has been bothering you or you don't understand, tonight is the night, this is the time, because yes, we will answer questions in the trade room, but the trade room is really just that, for trading. And you have to remember that your fellow members in the trade room have heard this stuff till they're blue in the face, and sometimes they don't want to keep hearing it. So we try to keep the teaching aspect of what we do in the classroom. So tonight is the night. You think about anything and everything. There are no such thing as, they say, bad questions or stupid questions. You ask your questions. This is the place. This is the time. And we will, try to answer them as best we can. Now, hold questions, and I will take breaks. Maybe every few minutes I'll stop and ask if you have any questions, and that'll be the time to do it. As I go through this tonight, if you've been trading futures or you've never traded futures, remember and keep an open mind that futures in the Globex are very different than trading futures during the day, even though you may be trading the same contract. And as we go through this information, you're going to see that tonight. And I will, talk about how those markets are different, trading during the day and trading at night. Okay. So what we hope to do tonight is talk about the Globex. I'm not going to spend a lot of time on its trading benefits. You should know that by now, especially after this last week that we just went through with China and Europe causing all this volatility. Which financial futures we trade and why, time zones to watch, websites, money management, and useful tools. John, hold that question, and I'll be happy to answer that one too in a minute. Okay. Now, many of you have heard me say, if you've attended any of the webinars, that if you want to learn to trade futures, this is the place to do it because it's a slower market. I think you can see that. Of course, I say that, but the last 10 days has been anything but slow. But that's because of what's going on in the foreign markets that affect the U.S. before it ever opens. And most folks who have trouble trading during the day will find success trading the Globex because it's a better trending market. Again, you've heard me say you don't have these high frequency trading programs like you have during the day. And when you say, well, why not? Because there's just not enough volume to accommodate these quant models that these mathematicians have created. So we're going to go through this tonight, and I hope that a lot of what you hear and see will start to help you become a better trader. Again, if you've never traded futures, this is the place to learn. If you've traded futures, as many of you have heard me say, and I just cannot overemphasize this, as we go through this information tonight, you have to understand this Globex market or you're leaving a lot of information and valuable trading tools on the table. I can't overemphasize that. Even if you don't trade it, you need to at least understand it in basic terms. Okay, I think most of you know this by now. I'm going to go through this real quick so we have enough time to do what we need to do tonight. The Globex was created in the early 90s. It's the grandfather of electronic trading. I was fortunate enough to be one of the pioneers to help learn these markets and understanding and develop the electronic platforms. In those days, you had to have a dedicated Globex terminal. It cost you a few $1,000s just to get one, and then you had to pay $1,000 a month to have access to it. The commissions were like $25 a round turn. If that tells you anything, you could only trade the big S&Ps, and the fills were awful. And like you've also heard me say, there wasn't a manual. There wasn't anyone to tell us not to do this or do that or watch out for this because it was just all brand new. So we had to learn it the hard way. The development of the Globex was a co-op between the CME and Reuters. It wasn't until 2004 that they allowed open access. So you can see from the early 90s till 2004 where they had open access, meaning anyone with an account and a computer could access these markets. Most of you know by now that in addition to being able to trade the Globex, it's also a wonderful tool for hedging. And if there's ever been a time to clarify this statement is when you think about Sunday night, you know, this was last Sunday now when we went home on Friday and we talked to you folks about there's a high probability that Monday they were going to really kick this market, and they did. And you had an opportunity on Sunday night to take advantage of that in terms of trading, but you also could have hedged your portfolio. And when you look back on what happened on Monday, being able to hedge your portfolio would have been a huge advantage. So always remember that if you have an equity portfolio with, at least $50,000 in it, this is a wonderful way to hedge it. In fact, it's not just wonderful, it's the only way. This is pretty much just a basic representation, just real simple. 1E mini, will hedge about $50,000 to $75,000. It just depends on what kind of portfolio you have, whether it's a perfect hedge. All right, now, most of you also know by now we only trade the E-mini and the bonds now. We've added the bonds to our portfolio of trading. But we do look at other markets because our goal is to figure out what direction this S&P is going, and we'll use whatever market we can in order to do that. Now, if I go quiet for a minute, it's because I'm flipping back and forth and checking the markets, as I just did. They're about where they were when we started. I will talk later about how you can get valuable information by watching the dollar and the bonds. That'll help you a lot in determining, direction on the E-minis. I think most of you know the hours now. The markets start at 5 o'clock on Sunday nights. If you are a trader, I don't care what you trade, whether it's options, whether it's equities, futures, whatever. You're an equity person. The markets don't open at 8:30 on Monday mornings. They open at 5 o'clock on Sundays. Remember that. And they don't open at 8:30 tomorrow morning. The trading day started at 5 o'clock today. It's that simple. And uh, if you're not on board with, at least know what's going on in the market when it opened at 5 o'clock this evening, again, you're at a huge disadvantage when you're trying to manage your money and trade during the day. So these are the hours. I think most of you know the markets, trade till 3:30, 3:15, excuse me, reopen at 3:30, trade to 4:15, and they shut down and resume start the next day at 5 o'clock. So if you have a position on this afternoon, let's say when the market closed at 3:15, it reopened and traded till 4:15. If you still have that position, then you're going to get an overnight margin call when the market's open at 5 o'clock from your broker. All right, these are the electronic trading hours. Electronic meaning as versus the open outcry pit where you've seen on TV, you have these traders doing all these hand signals. They're going the way of the dinosaur. So there won't be any open pits anymore. It's all going to be electronic trading before long. They're slowly edging those guys out, which is a shame. It was real art for them. Most of you should know the E-mini contracts and what, the value of a contract is. I know I'm going through this fast, but, I think most of you should know this stuff because I want to get to the good stuff. Okay, now you know by now that we break the market up into 3 sessions. We have the Asian session that starts at 5 p.m. All of the times that I'm going to use tonight are Central Times because I live in the Central Time Zone. It's just easier for me to do that. The Asian session starts at 5 and goes till midnight, and we look at the Hang Seng and the Nikkei. The Hang Seng, before it was became a possession of China, was a British possession, so it had mostly Western capitalization type companies in it, and it is more accurate as to what may be going on in Asia than markets inside China, like the Shanghai index, which is more difficult to make heads or tails of. But the bottom line is the S&Ps are going to more be reflected by what the Hang Seng and the Nikkei does from 5 o'clock at night till midnight. Once you get to midnight, the market starts to be more influenced by Europe. So the European session we define is from midnight till 5 in the morning, with the DAX being the predominant market there and the FTSE being, important as well because, Germany obviously is the largest economy in Europe. And then you have London, which is, many will argue is the world financial center still. I think most feel like it's New York. And then you have what we call the pre-US and post-US opening. So that is the basic 3 sessions that we look at. I just talked about this slide, so we can possibly skip through it. Okay, now there's something important on this slide we need to talk about. I've been doing this for years, but about 3 years ago, CNBC, when we were having all this crises in Europe, started the European close. That comes on about 10:20 to 10:30 Central Time, and the one of the commentators will come on and news people and talk about the close in Europe. Now, what you need to make a note of is that the cash markets in Europe close between 10:30 and 10:45. They don't all close at the same time. So the cash market in Germany, which is the equivalent of our Dow, closes around 10:30. But the futures continue to trade just like we have Dow cash and Dow futures. So like today, after the cash in Germany closes, you still have the futures that trade till 3 o'clock. So if there's been a big move, as we had today, then you have to calculate that because it can help you determine how Europe may open. I'll talk about that a little bit later too. Don't try to obsess over it right this second. All right, and during the course of the Globex, just like markets during the day, there are high percentage trade opportunities, and there are certain time periods when the market's going to move. You just have to figure out which way. Especially if a market rallies into a time pivot, then a lot of times you can go the opposite way. Now let me explain to you what I mean by that. The DAX opens at 1 a.m. Okay. So between 12:30 a.m. in the morning and 1 a.m., and this could apply to the Hang Seng or the Nikkei, but it certainly does the DAX, you'll see the S&Ps really start to move. If the S&Ps rally into that 1 a.m. opening on the DAX, there's a high probability they'll pull back by a couple of points after they open. Doesn't mean they're going to keep going down. They just may pull back and you can scalp a trade. All right, I'm not going to go through each and every one of these, again, because you have the recording and you have these slides somewhere. But these are certain pivots at night. If you'll notice, like 6 to 6:30, that's before the Nikkei opens. 9 o'clock is after the Hang Seng opens. 8:30 is after, again, right after it opens. All these times usually are affected by certain other foreign markets that open during the night. So there in itself is one big difference of trading at night versus during the day, because when you're trading during the day, you don't care when the Hang Seng opens or closes or goes on break, which it does at 11 a.m., p.m. You don't care what time the Nikkei opens or the DAX or anything else. You're only interested in what the U.S. market's doing. So you see there's one big difference right there. All right, so I'm going to stop right here. I'm going to go back and grab some questions. All right, let's see. John, you asked a question, who is trading at night, the bonds and the E-mini? Who are we up against? There are many fewer, how should I say it? You don't have as many institutions trading at night as you do during the day, but you do have some. I know for a fact that Goldman Sachs has a Globex trading desk. It's not active. It's usually only active when they have to hedge or there's been some kind of event like now or news. You have former floor traders who trade in size. We used to call them whales. And when we first started trading in the Globex, when there were only maybe 24 Globex terminals around the country, we all knew who everyone was. And some of these guys, had either backing or assets and, could trade in size. So you're trading against seasoned, if you will, former or current floor traders. You're trading against some institutions, but again, they're not near as active as they are at night. And then you're trading against the average retail guy, like we do. Okay, Lynn, Lynn G, you asked me if I use a 20 SMA. I do not use charts at night, and I'll explain that to you in a minute. I do use them during the day, but I do not use them at night. Let's talk about this for a second while we're on the subject of charts. Assuming that you buy into the fact that the foreign markets will determine how the ES or the E-mini moves at night, if you're charting the E-mini, then if you're not charting the Nikkei or the Hang Seng, you can see you have a hole right there in your trading. That's number one. Number two, a lot of nights you don't get enough movement. There's not enough volume for the charts to be efficient. Number three, always remember that everyone's looking at the same chart that you're looking at. It's just how you interpret it. Number four, there are other tools which we will talk about tonight, which will give you more information than a chart will. You just have to kind of take my word for it as I tell you this. So do not use charts at night. They're not going to help us at night, in my experience. Now, if you have a resistance and support number on a chart that may line up with what we use during the day, that's not uncommon, because a lot of the numbers we hit during the day are also viable at night. Okay. Never traded, this is Reynolds, never traded futures before. I've traded Forex. Need to know what I need to get ready to be in the trading. I hope we answer that for you tonight, Reynolds. Lewis, please define what you mean by pivot and pivot point. Again, pivot points are certain times of night or morning that you can expect the market to move. And as I said a minute ago, let's just take 1230. If you see 1230 in AM just before the DAX opens, you'll see these markets start to get more active. If they rally into the 1 AM DAX opening, a lot of times they'll pull back right after the DAX opens. You wait 2 or 3 minutes and you can sell it. Okay, Sid, clarify European cash closing at 10:30 and movement of futures during the day session. Okay. Who does not understand how a future is or originated? How a future is originated? Okay. As many of you know, just real quick, in the old days, and I mean this is some of the first financial contracts that were ever traded on under some elm tree. I forget the history of it now, by the Dutch. But mostly futures are used by farmers originally to hedge their crops. So a farmer knew that he was going to bring in a crop of wheat. He wanted to lock in his price. He would do that with a futures contract. Now today there are future contracts on anything you can possibly think of. Futures on gold, futures on oil, futures on uh, 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 they were trying to do futures on individual equities, but that never took hold. But there's almost a future on every financial market you can think of. So you have a Dow cash, you have a Dow future. You have a S&P cash, you have an S&P future. Same with the NASDAQ and the Russell, right? Okay. Every future and every cash, they have a certain spread that they maintain. Right now, the spread between the S&P cash and the S&P futures has been averaging about 3 points. Sometimes, and you hear them talk about the premium between the cash and the future. Don't obsess yourself with this. Just understand the basics of how this works. So you have the DAX in Germany, and you have the cash, the Xetra, and you have DAX, the future. So keep in mind now that the cash markets in Europe close at 10:30. But the futures continue to trade to 3 o'clock. So if there's an average 3-point premium, let's say, between the cash and the future, and the future had a huge move after the cash closed, then at some point the cash has to align itself with its future. Okay? So, Sid, I'm going to come back around and see if that helps you understand why you need to just at least make a mental note of where the S&Ps were trading when the cash markets in Europe close. Well, delta is something that the guys use during the day with the Murray lines. We do not use that term delta at night. All right, let's see. John B. I mean the former floor traders. Are they trading at night? Yes. Not like they used to. They're, in fact, just about every guy who had a Globex terminal was some kind of professional. But you don't, now that we have open access, those guys are, they just don't have the, uh, how would I put it? They're just not as involved as they used to be. When it was a closed market, then they were a lot more involved. That was John's question about former floor traders. All right, Steve, I think when you said go over that, we're talking about the futures. All right, so let me stop right here and ask this question. Is there anything you want to ask about anything we've talked about so far? All right, no questions so far. And I'll stop again in a minute and we'll take some more questions. Just hold them as we talk. Okay, there are several websites that you can use that will give you valuable information. The one or two on here that I want to really point out is the investing.com is more for quotes if you're having quote problems or something, but there's forexfactory.com and forexcalendar.com. There's Forex News, and you really need to spend some time on that site because it can give you very valuable information as to when Germany might announce PMI or China or what have you. The site's also very helpful because it will tell you what that news may mean to the marketplace. It's probably one of the best sites I've found. Now, it was originally created to accommodate currency traders, but it works for equities as well. Futures are futures. And so really spend some time, Forex Calendar and Forex News, because you can, gather a tremendous amount of information from these websites. Again, guys and gals, you don't have to become an international economist to trade these markets. It's simple. We keep it simple. Don't overcomplicate it. Sam, that's a yes and no answer, and it's not always the case. If the euro is going up, it's because the dollar is going down. If the euro goes up, then that's bad for European exports. And if you look at what the euro has done lately, it has been in a rally mode, and you see what the European markets have done. So what really happens is it's not so much how it affects the E-mini. The euro going up affects exports in Europe, and if Europe sells off, it usually will affect the S&Ps. Now, many of you have heard this term, if you're not familiar with it, called the carry trade. That means that most people who buy bonds may buy them in euros. They may buy them in yen because the yen and the euro are cheaper. Okay. Plus, they think that, the dollar is going up, so they can get, a big bang on their buck. So a lot of these big moves you're seeing in these currencies are these unwinding of these carry trades. All right, the dome. Now, there's a lot to talk about here, essentially. Depth of market, which is the order book, that's what the dome is called at Gain Capital. Some of you have the matrix, some of you have, I don't know, there are different terms at different platforms. It is that volume uh, order entry that you use to enter orders on your platform. It is not complicated, but you can, most people have more trouble with this than they do anything else we do at night. Let me say it this way, and let me first clarify before I say it. The dome is the most important, and the dome is the most important and primary indicator that you can use at night. Now, I want you to hear me very carefully. If you try to apply the principles of the dome during the day, it's not going to work. Here again is one of those examples of something that works in the Globex that doesn't work during the day. There's too much volume during the day. The markets are moving too fast to get a good read and get an understanding of what the dome's telling you. You will also try to use the dome to trade other markets other than the S&P, and I will tell you it's not going to be as efficient. I'm not going to say that it doesn't work. It's just not going to be as efficient. Now, as many of you know, trading is all about probabilities. That is the bottom line. If you put a trade on based on all the information you have at hand, what are the probabilities that that trade's going to make you money? Nothing. Okay? And there's people out there that'll tell you this, that they have an indicator that works all the time, or 100% or 95%. My experience is if you can find an indicator that works at least 80% of the time, you can do well. So when you hear me say that the dome is the most important primary indicator we have, what I'm saying is that 80% of the time, it is a wonderful tool. Okay? You should not put a trade on if the dome does not support your trade. It's that simple. Now, there are going to be times I'm going to say sell them, or I'm going to say buy them. The first thing you're going to do is your eyes are going to flash over to your dome or whatever matrix or whatever you have on your platform. And you'll say, but Bill, wait a minute. It clearly has more volume to the upside and you're telling us to sell it. Well, sometimes that's a probability trade because we just had a big move like we had a few minutes ago. Chances are if there was a big and quick and violent spike, chances are you have a positive dome. What you're trying to do is anticipate when the dome's going to roll over. So let me summarize. The dome is your best friend. The dome is the most primary and important indicator we use at night. And you may not believe me right now, but if you spend some time in this room or talk to the other members in the room, you're going to find out that's what it is. It works. If you do not have that dome to support your trade when you're trying to make one, chances are you're not going to be successful. You can use the dome not only to get in or get out of a trade or make a trade. A lot of times the dome may keep you out completely. So there are many times I'll look at the market and say, okay, I'm thinking about buying it. I look at the dome and the dome says, don't do that. All right, so the dome or depth of market is real simple. The S&Ps are going to trend towards the volume. Now, in the classroom, you have a uh, turquoise-looking deal, looks like a thermometer. That is the dome-o-matic that calculates the dome 10 levels deep. In other words, the order book, depth of market or order book, that's what it's called. On your dome, it's gonna say, you have so many contracts at 30, you have so many contracts at 29. Right now on the dome, we have 430 contracts on the bid, 400 on the ask. That's light volume. That's when you get these exaggerated moves. You should be looking at 1,500 contracts on each side. On each side. Excuse me. Sorry, went down the wrong pipe. All right, so the dome and the E-mini can be your best friend. Thank you. The volume is going to trend, or the dome, the price of the S&P is going to trend toward the volume. It's that simple. Don't try to overcomplicate it. When we're in an uptrend like we are now, and you have volume that is to the upside, what you're trying to do is figure out when the dome might roll over. So right now we have 500 contracts on the bid, 500 on the ask. It's a neutral dome. But if I can anticipate, or you can anticipate, when the dome is either going to roll over positive or roll over and go negative, then you can make a pretty good trade. All right, so this is usually where most people have their question. What questions do you have about the dome? Well, Scott, there's no rule of thumb. The best thing I can tell you is that after watching the dome for a short period of time, you will get a feel for it. And that's been my experience with most people who start to watch the dome and use it. Typically, what happens is that they have a hard time getting their arms around it because they think, well, if there's a lot of volume to the upside, that should act as a cap to keep the S&P from going up. But it's quite the opposite. It attracts the S&P. Now you can have times where the volume is so dramatic. I have seen this, and we'll see it maybe 2 or 3 times a year, where the volume, like you'll see 1,000 contracts at one price and 1,500 at another and another 1,000 at another. That can act as overhead. But you will get used to what kind of volume you should see at certain times of night. And the volume picks up as we go through the evening, obviously getting heavier when we get into Europe. But right now we have 400 contracts on the bid, and we should have at least 1,500. So if someone comes in here, it's just like, any thin market, they can, cause dramatic moves. So let me stop here. Um, let's see. I'm going to stop and we'll take questions on this dome because it's important. Now, the dome-o-matic that's in the room, that is something that we asked Ninja to help us with, and they created. And basically, it calculates the dome for you rather than you have to figure it out manually. What it does, it reads, the dome and automatically calculates, you've got a ratio of 1.5 to 1, 2 to 1, and you'll see that little purple or turquoise arrow moving up and down. Scott, most of the big traders will not show their orders. That's why you don't know what's coming. That is one of the disadvantages of trading at night. For example, right now there could be a whale, as we call it, sitting out there. He's ready to buy, everything between 30.50 and 33, and he can buy everything 800 contracts. Now, that may sound like a lot to you, but that's not. in the world of institutions or, some of these big traders. I can move, I can post 150 contracts using the managed accounts myself. Then you add the people in the room, we could probably post 200 contracts on there, just our group, between our group and the managed accounts. John, do you see much spoof on the dome? You don't see it like you used to. You'd see a 500 or 1,000 contracts show up. The guy would throw that out there just to see what kind of reaction he might get or kind of draw he would get. But now there's more liquidity than there used to be, so you see less of that. Sid, your question about the total number of contracts. Basically, here's how you look for a trade, all right? This is the process that I go through. And I don't say that this is the best way for you, but this is how I've done it for years and what works for me. As many of you have seen, my support and resistance numbers, without me sounding egotistical, are pretty accurate. All right, where do these numbers come from? Well, I take note of these numbers as I watch the market trade during the day and at night, and I see where the support and I see where the resistance comes in. For example, I know from past times when we've traded in the 1932 area that that's an overhead number. Guess where we went tonight? Right to 1932. I know that 1907 area is a support number. I know that 1929 is an overhead number. And look at where we are playing around this 29 number, 28 and a half to 29. Where do I get these numbers? Do I just pull them out of the air? No, it's watching these S&Ps trade. When they hit a number and back off and then go again and back off, and then when they go through it, there's a huge move. I document these kind of numbers and I take note of them. So you have to have good support and resistance numbers, whether you're trading during the day or at night. Now you're going to say, well, you get those off of charts. Yes, sometimes you do. You can get them off of charts, or you can get them by watching the markets trade like I do. They call old guys like me tape readers. All right. Now, let's say that I'm pretty comfortable. I think that 1932 is a probability of being a place I can sell them if it gets there. All right, we're just going to use 1932. That's the high of the night. We've traded at 30. It's also a number that I have traded off of and have observed in the past. When we approach 1932 and I'm thinking about selling it, the very first thing I'm going to do is what? I've already got a place I'm thinking about selling them. What's the first thing I'm going to do when I get close to that number? Y'all have it correct. Check the dome. So when we approach 1932 and I want to sell them, I want to see that there's at least a neutral dome, or it's about to roll over from positive to neutral, then negative. If I wait for it to go decidedly negative, I'm going to leave a couple of points on the table. And at night, all you're trying to grab are 2 or 3 points, because most nights in the Globex you have a 10-point trading range. Here of late we've had 25 and 30-point trading ranges. We've already had 23 tonight. No, more than that, 25. So if I want to sell 1932, I'm going to look at the dome. Right now, the dome says the S&Ps are going higher. We have 800 contracts on the ask, 270 on the bid. That tells me the S&Ps right this minute are going higher. So now I have a place I want to sell them. Next thing I'm going to do is look at the dome. Then I'm going to look at the market du jour, like the DAX or the FTSE during the European session. During the Asian session, I'm going to look at the Hang Seng and the Nikkei. I want to see if those markets are trending in towards my direction. Now, I just told you that we're going to go to 32 when they were at 30 and 3/4 because of what the dome was telling me, and you see they're at 32. Okay, so I have a resistance and support numbers of where I want to make a trade. I then look at the dome to see if it supports what I want to do on a trade. I'm going to look at the Nikkei because if I want to sell it, I want to make sure the Nikkei is not running, 200-300 points to the upside, or the Hang Seng, or the DAX, or the FTSE, depending on what time of night it is. I want to see if there's news coming out. I want to see if we're close to a pivot. I take all that information, I put it in my little black bag, and then I kind of come up with a trade. All right, we're going to stop here, and we're going to take questions. So let me go back. Uh, Dennis asks, when there's no arrow on the dome-o-matic, is that usually because it's neutral? Yes. The small numbers next to the prices are the number of contracts available at that price. Now, what did I say is overhead? 32. What did we do? We just ran up to 32, and now look, we're at 29 and 3/4. So Will, when the dome is positive, that means that the ask has more contracts than the bid. That is correct. John, sometimes we see a big number in the book. 7 and 6 rows back. Are these good targets? Not necessarily. Lawrence, you lost internet. Um, Lawrence, yes, people put orders in, take them off, put them on, take them off. That's not unusual. Well, here's the problem, Scott. Your question is any chance of indicators being available for Thinkorswim or any of these other platforms? And the answer is, I mean, they have to want to develop it. They want to have their software people develop it and spend time on it. You have to remember that these numbers are not Ninja or Thinkorswim numbers that we get on these domes or matrices or whatever you want to call them. They all get their feed from the same place. It's the CME. It doesn't matter what platform you're on, the numbers are going to be the same. So if there are 212 contracts at 30 and a half, that's going to be on everyone's dome or matrix, okay? So whatever you see on the Dome-O-Matic is a Ninja feed because that is something we developed in concert with Ninja. Lynn, so if the Nikkei is up 200 or 300 points, you sell the E-minis? I'm not sure what your question is. If you'll rephrase it, I'll try to answer it. Now, I told him in the room if he hits 32, sell him. I doubt anyone did it though. This market's got a lot of people just scared. Ah, look at there. Susie shorted 31 and a half, bought back 29 and a half. I take it back. Sid, how do you get the Dome-O-Matic? If you are a Ninja member, meaning that you buy that annual one-time fee, which I think is 1,500, then you can probably get access to it. Or you can just save your money and get it from our chat room. I mean, Sid, I don't have the URL for that. I mean, I wouldn't even know where to start. I mean, that is a Ninja product, so they're not going to give it to you for free. Lynn, you said before I put in an order, I checked the Nikkei and the Hang Seng. I don't want to, short the S&Ps if the Nikkei and the Hang Seng during the Asian session are continuing to go higher. Okay? You need to know where these other markets are because they move the S&Ps 80% of the time. Do you know why the S&Ps are rallying? In theory. Because the Nikkei opened down 300, now it's up 150. So, if you were trying to buy or sell this market, you needed to have your eyeballs on the Nikkei. And now that the Hang Seng's about to open, you need to keep your eyes on both of them. And then when we get to past 12 o'clock, you need to start, looking at the DAX. And once the DAX opens, the DAX is the dog that will wag the tail. The DAX becomes predominant or dominant. All right, any questions about anything we've talked about so far? Sid, what was that website I told you about? Um, it was on that slide before where you can get a lot of these quotes. Um, I can't remember now. I'd have to go back and look at the slide. Investing.com. That might have been it. I can't remember. Thank you, Steve. It was on a slide that we posted earlier, but Steve has posted the link to it. All right, now the slide you're looking at right now, the dome that you see has volume profiles to the right, the histogram they call it. You can see what a dome looks like. This is the Gain Capital dome, for those of you who don't use the Gain OEC product. I personally trade this particular dome. That's why it's up there. And at the bottom, where you see the bottom of the green or the red, you can put the sums. So if your dome allows you to put the sum of the total 10 contracts, bid and ask, the 10 levels, that's helpful. And here's a slide on the Dome-O-Matic that we talked about a few minutes ago. I think most of you have observed that little rascal and see how it works. All right, I want to stop right here because I want to spend some time on money management. Any questions about anything so far? Not only questions about anything we've talked about, but anything that you want to talk about. What time we do the updates, anything like that. Now let me talk about that a minute real quick while I brought that up. You are in a room now, as you've heard me say, that's the only room where you have, 24-hour participation. The Globex is just about 17 hours of that 24 hours. So unlike the guys during the day that are constantly in the room talking, communicating back and forth, they're on the horn the entire time because they're only on for about an hour, hour and a half. My gig, the Globex, is about 17 hours long. You don't want to listen to me for 17 hours because I don't even know what I could say that would make sense for 17 hours. I don't want to talk for 17 hours. And you don't want to leave your speakers on and have me in there jibber jabbering and not talking about you don't know what's important and when it's important because it's just ad infinitum conversation. So in the Globex, we do things a little differently. I have updates where I do my overall, what I'm thinking, what we're looking for at 5:15, what our strategy might be for the night, whether we're going to buy the dips or sell rallies. I'll come on again at 7:15 because that's 15 minutes after the Nikkei opens. I'll come back on again at 9:15 or all in between those times. But those are the times you can count on me at least coming in the room and touching base to make sure we're all still alive and breathing. If it's slow, I'll come in and say, still can't find a trade. We're still on the sidelines, blah, blah, blah. After 9:15, we keep all of our communication in the chat room because most people want to leave their speakers on. A lot of their household has gone to bed. They don't want to, hear me screaming and yelling over the microphone while their household's trying to sleep. So after 9:15, most of the communications will be via the chat. Sunday nights, we do not call trades because Sunday nights, the volume's thin, markets are more unpredictable. You haven't had the benefit of seeing where the market closed an hour before and reopened. A lot can change over the weekend. So Sunday nights are difficult nights to trade. So we do not call trades on Sundays unless there's been some, event or news like we've seen the last couple of Sundays. Then we'll come in the room and talk about it. We do not call trades as a matter of course on Fridays because, when you're calling trades, as you can imagine, it's a lot of pressure on these guys. So we give them a Friday off, plus Friday's usually more difficult trading, especially during the week of options expiration. All right, Sid, your last question. What is your take on the following tools? There is a lot to be said for volume profile and Murray lines during the day. Roy and I have tried to make those, lines work at night, and they work, but not like they do during the day. All right, any other questions whatsoever on anything we've talked about so far? Now, what are the S&Ps telling you right now, watching what they're doing? What are they saying? They're telling you the Hang Seng in China is probably going to open up. Lawrence, that is a Roy Ratola question. I do not do the Murray lines. You're asking the wrong puppy. If you're an engineer or somebody who loves math, you'll love Murray lines. That's all I can say about that. Reynold, you want to talk about margin calls? Okay. What time, and I'm going to ask you so you can, it's better if you answer the questions. It sinks in better, at least in my experience. What time did the market open today? Opened at 5 o'clock Central Time. Okay. So Wednesday's trading started at 5 o'clock today, not 8:30 in the morning when the U.S. opens. In the world of futures, or if you're a trader, or you're a sophisticated trader, the trading day started at 5 o'clock tonight. Okay? Not 8:30 in the morning when the U.S. opens. The market closed at 3:15. That's when the futures close. They reopen at 3:30. They trade to 4:15. If you had a position at 4:15 and you still had it at 5 o'clock when we started Wednesday's trading, you're going to get a margin call. And on the E-minis, it's about $5 grand for most platforms. So where you could trade the E-mini during the day for $500 a contract, if you take it home overnight, you get a margin call, and that's about $5 grand. Bonds are 37.80. You know, they're all different. And different platforms have different margin requirements. Did I help you with that? Carl, what is the long course that I teach? It has the Greek isms, the indicators, money management, and it is archived, and you can listen to it at your leisure. When you join this room, you pay the $147 a month, and that's it. You get all the trading, you get all the education. We never try to surcharge you. Say, okay, pay for this, and we'll give you some more education. Everything we have, all the recordings, everything's available to you, every future education session, everything. Oh, Scott, why do you have to ask me that question? Uh, when you signed up, you should have gotten it in the members area, I think. Otherwise, you need to ask Ivan. I'm not, it may be in this classroom. I don't, you have to understand, guys and gals, I don't listen to these recordings. I don't go back and look at them. I don't know where they put them. You know, I do the manage money. I've got to manage the room. I've got to manage these other moderators. You know, so I have my hands full. No reason to be sorry. I'm apologizing because I should know. I'm the one that ought to know. It's my company. You know, if anybody should know, it's me, but I just, you know, there's just so much I can keep up with. But Ivan or Jeanette especially, when you see her pop in the room, she'll know where they are. Yeah, the you have stuff in the classroom, you have stuff in the trade room, you have stuff in the members area, as I understand it. John, it's kind of what we're talking about tonight, and then the course that they're talking about, there's some of that in there as well. Oh, Lynn, I can't believe you asked me that question. I don't know. I can't tell you the last time I even looked at the website. Isn't that embarrassing? All right, we've had a high of 1933 now. Okay. Thank you, Scott. Scott, you're an engineer, right? Yeah, these engineers, you know, they they're very accurate. That's how they were trained. They can usually find stuff like this and tell you exactly where it is. All right, money management. Y'all ready to talk about that? Because we only have about 15 more minutes. Okay, this is where I find most fall short in their trading. They can be excellent, uh, at finding a trade, discipline, at putting a trade on, using their stops. But if you do not have a consistent and disciplined money management system, my experience is you're not going to get the consistency in your trading, and that's what we're all here for. It doesn't do you any good to make 2,000 one week and then give back 3,000 the next week. If you have a disciplined and effective money management system, it can eliminate a lot of mistakes that traders make. Now, I know some of you have heard this, but let me go through it carefully. The very first thing you should do when you join this room is set a goal of what you would like to supplement your income. A realistic goal, not one of these where I want to make 20 grand a month. I'm talking about realistic goals. So for conversation's sake, let's say the goal is $2,000. Once you set that goal, it determines your risk parameters. It determines what stops you need to use. It determines how many contracts you're going to trade. It automatically starts to put all the pieces in a puzzle that normally can cause you problems. If your goal is $2,000 a month, and you assume there are 20 trading days in each month, and you assume some nights you're going to lose money or days, you have to average at least $100 a day. Some days you might make 150, some days you might lose 50. But assume you average $100 a day. Guys and gals, as you heard me say, this is not hard to do. So how do you do that? Well, you trade the same number of contracts all the time once you set your goal. So if your goal is to make $2,000 a month, then you can do that by trading two contracts and making 1 point, or one contract and making 2 points. It's a lot easier to trade two contracts and find 1 point than sometimes it is to trade one contract and find 2 points. Plus, when you trade more than one contract, you can stagger where you get in, stagger where you get out. So when you set your goal, now you can determine what your unit's going to be or the number of contracts you're going to trade. So let's say that you're going to trade two contracts. Your goal is to make $100 a day. Your unit's probably two contracts within that one unit. You'll hear me say, buy a half unit, sell a half unit. The mistake that most people make, and if you haven't made it yet, I'm impressed. 1 minute they're trading one contract. And they say, oh, this was a great short at 32. And it goes to 35. Well, if it was a great short at 32, it ought to be a great short at 35, and you sell another one. Then it goes to 40, and you sell a third. Next thing you know, you're trading four contracts, and you're losing your butt. You're not a four-contract trader. So then you finally yell, Uncle, I can't stand anymore. I've lost more than I'm used to losing. So then you get out. Now you're back to one contract, trying to get back the loss on four contracts or one contract, which means now you have to be right how many more times statistically to get that money back. Think about it. You keep your contract size the same at all times. Now, when you get your confidence up and you're trading better and you like what you're doing and you feel more comfortable, you want to increase the size of your contracts along with your goal, that's fine. But once you set your unit, you stay with the same number of contracts within that unit. You don't change it. Okay? You lose with 2 contracts, you win with 2 contracts. I know y'all know the answer to this. What do you do when you hit your goal? Bonnie, it's not fair. You can't answer. Yes, any of those are correct. Go fishing, walk the dog, take a nap, do it again and lose it all. That's funny, Bonnie. I like that. Now, never compare what we do to casinos because there is some methodology to what we do, and there's not any methodology really in casinos. Everyone has a system. This is what the casinos know, and this is why they plow you with alcohol and free food, that if they keep you there long enough, you're going to lose. Okay? Every time you make a trade, every time you make a decision, you exponentially increase your chances of being right or wrong. In other words, if you make one trade a day, you have a 50-50 chance of being right, right? Now, I'm not saying that you only trade one time a day. That's not what I'm saying. I'm just trying to help you to understand that every time you make a decision, every time you make a trade, you increase your chances of making a mistake. I can't tell you, and I don't mind telling you, I trade 6 contracts. I trade them in pairs of 2. So I put 2 on here, 2 on there, 2 on here, take them off, 2 here, 2 there. My goal is to make $700 a day. If I can do that, my wife's happy. I can't tell you how many times I've made $700, a lot of times before dinner, only to give it back because I kept trading. Especially during this cuckoo market we see during the day with all these algorithms, algos as we call them today. Like our daddies used to say, do as I say, not as I do. If you put on 2 contracts, let's just say for conversation's sake, using tonight's numbers, we sell 32. And then, your goal is to make $100 and it goes to 30 just like it did a minute ago. I mean, it went to 30 and it dropped 2 points in no time. So right there, if you put on 2 contracts, it dropped 2 points, you could have made $200. But if you took one contract down, you're already up $100. You bring your stop down, so you can't lose money if you want to keep one to see what will happen. So again, you sold 2 at 32. You had stops at, let's say, 35 and a quarter. They go to 30. You now have a profit of $200. You can take the whole thing and say, I made my goal. Or you can keep one on, bring your stop down so you can't lose money to say 32.75. Try to stay in the trade to see if it'll keep selling off on your runner. So you can, when you trade 2 contracts, you can keep a runner. You trade one contract, it's just like hunting. Once you shoot that bullet, you're done for the day. All right. So we're going to stop here because my experience has been an hour and a half of me bumping my gums is about all that, you want to hear or can stand to hear. There's what they call cognitive overload. And, we have these first Tuesday, and it's like anything else, the more you attend, the more you're apt to understand something you didn't see before. Just like when you watch a movie a second time, you see things you didn't see before or hear things you didn't hear before. All right, so the floor is open for questions. And while you're formulating your questions, I am going to check the markets. 31, high is 33 and 3/4. Bonds are 26. All right, John, I have noticed when you suggest a trade, you tend to use shorthand. Can you explain price and exit price? For example, for the S&P, you may say sell 32. I'm not sure I understand what you want me to, it's sell a half unit at 32, put your stop at 35. I'm not sure I understand. Is that a question or your recommendation? If you'll redo it, I'll see if I can answer it better. John, we're typically going to use 2.5 to 3 point stops. In this market, 2.5 to 3 point stops, you can still have the trade right. And I can't tell you how many times we've been stopped out the last couple of weeks and still would have made money on the trade had we used 5 points. We typically will give you a 2.5, 3 point stop, which is usually based on the next resistance or support number. And usually in the Globex, 2.5, 3 points, you have a good chance of staying in a trade. If you'd have sold 32 tonight, they went to 33.75. There's 1 3/4. You would have been able to survive the trade. Always put your stops at an odd number, like 32.25, 32 3/4. Never at an even number or a half. Bonnie, he's asking sell 32.25. Will you say short 32.25? Yes, unless it's a fast market and I have to give you parameters, because sometimes you just may not have time or you just can't get to fill, like tonight on the bonds. We're seeing the bonds move in a matter of hours. It used to take a week. I mean, this is unprecedented volatility, guys and gals. Look at what oil's done the last few days. I can't ever remember seeing oil move like this in my history. Oh, I see what you're saying. I get it now. Thank you, Bonnie, for clearing that up. Sam, they might be, but until I can get in there and look at them, I don't want to say right now. You have to understand, guys and gals, I'm watching this market. I'm watching how they move. I'm trying to get a feel for it. So it's not like you have a number in my head and I walk away and I come back and see if the number's there. I'm watching this market move. I'm watching to see where all the activity is in when it gets close to that number, so forth and so on. So right now, I don't have a clue what to do with the bonds because I've been in here and not watching them. Bonnie, thank you for helping me with John's question. We'll use Bonnie as our translator. Lawrence, when you say my target, how do I come up with a target? It's usually going to be the next support number. If we sell 32 and support is 29, I'm going to say you probably want to take half your position down at 29 and keep the other half as a runner to see if it'll go lower. Does that answer your question, Lawrence? Depends on where the next support number. If we sold 32 tonight and you sold 2 contracts, 1 unit, I would probably tell you to be thinking about taking one down at 29. You might want to take all of them down. So I'll give you the support number of 29. If you want to take one down at 29, keep one to see if it breaks 29. The next support line will be 25. Always remember, we try to keep the whiteboard. Always check the whiteboard. And, we try to give a ballpark of where we are for the month. It may not be accurate to the penny, but it's just a ballpark of where we are, where we're up, down, on the bonds, on the S&Ps, the total for the month. The bottom line is, unless you're making money, unless you're happy with the service, unless you're comfortable and you think you're getting good information, what we put on that whiteboard is our returns and our profit are immaterial if you're not experiencing that. Okay, so keeping score is nice, but it's only good when, we all benefit from it the same way. I've called trades and have half the room, lose money on the trade because they didn't do something they were supposed to do. They stayed in too long, or they didn't get in at the right price. I can't tell you how many times I said sell 32 and I'll ask for fills. Next thing I know, I sold 29. Well, we're going to be getting out of some of them at 29. You can't be selling 29 now. That kind of thing. If you miss a trade, don't chase it. It's like I have four daughters and one son. I used to tell my daughters when they broke up with a boyfriend, I said, darling, just, their boyfriends are like buses. Just let that one go. There'll be another one along shortly. It's the same thing with trading. If you miss it, just let it go. There'll be another one along. But I can't tell you how many times I've seen, especially someone inexperienced, I'll say sell them at 32 and they say, I missed a trade. Can I get in at 29? And we're looking at, taking 29 as a profit. Y'all listen to Bonnie. She's been around a while. She knows these markets. Steve, that is not an uncommon problem. So don't persecute yourself. Oh, John, do you offer an outline of how your system and screens are set up? It's not going to do any good unless you're using the same platform I'm using. First of all, um, I have two monitors. I have a man cave upstairs in my house. One of those rooms over the garage, and I have three monitors there. I use two of the three because I have to watch the managed accounts. And then at night, when I go downstairs after the wee hours, I'm on a laptop, so I'm only using one screen. I'll be happy to show you how I have it set up, but you have to have the OEC platform for it to do you any good. I'm going to make a little. This is more information than you need. Uh, my wife, who has a PhD in child psychology, and she sees a lot of children during the day, most of them under the age of 10. She has a very uh, uh, high pressure job. She is a specialist in autism. So she gets up at the crack of dawn and sees, you know, kids with issues all day. And, it takes a lot of patience to do that. And we've been married 30 years. And here's the funny part. She will not go to bed until I go to bed. So if I'm on the computer calling trades and talking to you folks in the chat room, and usually she's sitting, in my study, lying on the sofa, or she's in the den, lying on the sofa, or sitting in the sofa, or whatever, doing whatever she's doing. And, 10:30 at night, I know she's tired. I say, Anna, why don't you go to bed? She said, nope, I'm going to wait on you. She cannot sleep unless I'm in the bedroom. So instead of having, a quiet room, dark, where she can sleep, I'm in there with, if I'm not talking, I have the light on the computer, the screen, which lights up the entire bedroom. I'm typing, so that's making noise. That's why I don't talk after 9:15. There's another reason. And I'm moving around, cussing under my breath when a trade goes against us. And she would rather have that, than get up and go to bed and sleep and let me stay up here in my man cave and do my thing. Lawrence, um, what I trade with during the day is totally different than at night. I do look at charts during the day. I look at the VIX during the day. I look at the NASDAQ during the day. I look at support and resistance numbers. You know, um, uh, I look at a lot of different things during the day that I don't even look at night. So when I tell you that, trading during the day is different at night, it's two different markets. That's why I say you can think you're one of the best day traders there are, but the rules at night are different. I've seen people try to trade the Globex at night. They don't understand, the volume, the thinness of it. Uh, you know, I know people who try to trade this market don't even know the Nikkei exists. How can you trade that? You've seen what the Nikkei and the Hang Seng do to this market. Look tonight. When that Hang Seng turned around, what did the S&Ps do? All right. I am going to make my way to the trade room. Any other questions? Yeah, Lynn, I mean, she just can't sleep unless I'm in the room. That's what she tells me. Bond trade setting up. Oh, you're right. But we can't sell it here because these S&Ps are too high. We need to wait for these S&Ps to get down to around the next support number, 1925, and then we can take a gander at the bonds. All right. Any other questions for me? I hope that we said something tonight that was helpful, that'll make you a better trader, help you make money. If we did that, then our time together tonight was well spent. And then my dog is sitting here looking at me like, wind it up, please. I need to go out. Well, John, thank you. That means a lot to me. I don't know whether I'm going too fast, going too slow, because I don't consider myself a teacher. And to you guys, like Gertrudis and Bonnie and Elizabeth and Susie, you know, um, these gals are well disciplined. They've been around a long time. Elizabeth and Barbara Silver, who's in the room, they've been with me since day one, I think. They're what I call charter members. These ladies understand and know these markets, so you guys can do well to listen to them. Barbara, are you listening? That's something else you have to decide. Some people have just, they either trade in the Globex because it's more convenient, or they're just more comfortable trading there. There's just too much volatility during the day. I had lunch today with a guy who I worked with in the business. We were both investment bankers and we go way back. We both started Merrill Lynch about the same time. We were both at Prudential together, so we way back. And he knows I have this service. He's retired. He said, "How's your service going?" I said, "The last 10 days have been the most draining of any time I can remember. It has been a really emotional roller coaster the last few days." So I'm with you. All right, headed to the trade room. Be back in a little bit, or in the trade room. Headed there now.